Welcome to iGlobal Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you very much for joining me. Well, overnight the Australian dollar depreciated further against the greenback after a worse than expected retail sales data that was revealed yesterday. In March retail sales, it missed the 0.2% forecast and came in lower at 0.0, with the previous number in February slightly higher at 0.6. With the weakness, the Australian dollar has fallen to an 11-month low of 74.33 as the greenback appreciates further. Also, to note that US Federal Reserve Jerome Powell warned earlier in the night that some investors might not be well positioned for an anticipated US interest rate hikes, triggering further dollar rally. The target to the downside for the Australian dollar, even though bullish divergence is evident, is at 73.75. I heed for the people that are trading from a longer side to beware, because bullish divergence is a powerful signal, and if it does snap to the upside, could easily see a rally back to 76 cents and catch the market off guard. But at present, the market still seems persistent in pushing lower. So the objective at this stage is at 73.75 and reassess from there. Since the break of the Euro's neckline from the double top reversal at 121.80, the target was at 180, which is near enough been achieved now after the overnight post a new low of 118.37, with the dollar index posting a new yearly high of 92.90. Towards this region, and because we are oversold and the ADX is overheating, I don't have a view towards 118, so I'm squaring up my position and time to reassess. As the downtrend continues though, you can see the market is still poised to the downside, but at this point, due to the low technical implications, it's very hard to get bearish at these levels and could see a slight retracement and some profit taking. Resistance on the day though comes in at 119.15. But the dollar yen has found a bit of ground after briefly dipping underneath 109, with this morning the market has rallied up to a high around 109.60, right where the resistance lies. A break above there would give us the next move up towards 110.55, so all eyes on the resistance this morning at 109.60. Support on the day comes in at 108.70. The pound hasn't made any significant moves in the last 24 hours and still coasts sideways after the last 4 days trading. Although we did get a brief step to the downside, it still remains above 135. At present, the market waits for the Bank of England, which is tomorrow at 9 p.m. It is unexpected from the market's view that Mark Carney and the rest lack any support to a rate hike. But an unexpected one could see a knee-jerk to the pound and actually rally, or the statement could come out a little bit more dovish, which would also give further implications for a short-term rally in the pound. But at present, I'm still looking for some indication from the technicals to support this view. So at present, I'm neutral, and I'm still waiting for a signal to support a firmer direction in terms of from my risk management view. The gold rallied from a low overnight from 05 to 17 after geopolitical risks coming back in from earlier from President Trump with the Iran deal. Renewed safe haven demand helped soften the blow against the US dollar rally as the President Trump announced he would exit the 2015 Iran nuclear deal and reinstate sanctions on the Iranian oil outlook. So the fact is that the market has actually found and also respecting demand from this 1,300 level. Looking towards the top side, I believe the market can retrace easily back towards the region of 2030 and still hold the foundations at 1,300. Silver outlook hardly has moved over the last 24 hours and still coasts between 1630 to 1650. Overall, the technicals are bullish, so I do expect to see one more test to the upside, but still probably holding within that range of 30.50. rounding off with oil. It did spike to the downside around 67.5 before rallying back. Market at this stage still holding to near 4-year highs, but I still hold a neutral to slightly bearish view at these levels, purely for the fact is that towards 670 and 72 should find good supply, and see how the market turns out in the next 24 hours as it now slowly digests the reaction from the US after pulling out from its Iran nuclear deal. Well, that wraps up for today. Thank you very much for joining me. And as always, look out for the intraday report. And I hope you enjoy the rest of the day that's ahead.